From shopping for groceries to saving for the future, from managing your monthly expenses to discussing your next pay raise, you and I both know the economy shapes both our daily decisions and professional conversations. While economic terms in English might sound technical and complicated, I promise you, once we break them down, they become much clearer and more practical to use in your everyday conversations. For example, have you heard words like inflation, tariffs, or GDP in the news or at work and wished that you could use them more confidently in English? There's no doubt that these terms are everywhere, and today I want to help you master them so that you're able to express your thoughts easily on economic topics. By the end, you'll have learned a variety of vocabulary that will help you confidently discuss economic topics, whether you're reading the news, talking with colleagues, or making important financial decisions. To make this lesson really clear and well organized, we're going to explore 6 essential categories: economic measures, economic changes, jobs and income, rules and regulators, government and money, and finally, market monitoring. So grab your notebook and let's dive in. I want to start with the tools experts use to understand how an economy is doing. Think of these like taking measurements to check on something's health. The first term you'll often hear is GDP, or gross domestic product. GDP is the total value of everything a country produces and sells in one year. This includes all the products in stores, from phones to furniture, and all the services from healthcare to education. When you hear sentences like, the country's GDP grew by 2% this year, it means the whole economy is producing more than last year. But GDP isn't just one thing, it's made up of several important parts. I want you to think about it this way: GDP includes everything you and I buy at stores. That's consumer spending. It also includes what businesses spend when they buy new equipment or build new facilities. That's business investment. And then there's what the government spends on things like schools and roads. Finally, it also includes the difference between what a country sells to other countries and what it buys from them. We call this net exports. All these pieces together show us how much economic activity is happening in a country. And now, let's move on to talk about something that affects all of us daily: inflation. You've probably noticed this in your own life. Maybe a coffee that cost $3 last year now costs $3.50. Or your grocery bill is higher than it used to be. That's inflation, when prices keep going up over time. And this matters because it affects so many parts of our lives. When there's inflation, everything tends to cost more, from your groceries to your gas. Your savings might not buy as much in the future as they do today. This is why people often hope their wages will increase to help cover these rising costs. Banks also pay attention to inflation when they set their interest rates for loans and savings accounts. We're going to talk more about interest rates in a moment. But first, let's look at one more important measure: the unemployment rate. This tells us what percentage of people who want to work can't find jobs. It's a simple but powerful number. When you hear sentences like, the unemployment rate dropped to 4%, it means more people are finding jobs. This number helps everyone understand if it's getting easier or harder to find work in the economy. And finally, let's understand supply and demand, a relationship that explains why prices change. I like to explain this with a simple example. Think about umbrellas on a rainy day. When the rain starts suddenly, everyone wants to buy an umbrella. There's high demand. and the stores may have only a few left. That's supply. So what happens? Well, the prices go up. But on sunny days, stores might have a lot of umbrellas. They have a high supply, and very few people want to buy them. So there's low demand, and as a result, prices fall. This same idea explains price changes for everything from housing to concert tickets. Now that we have these basic measurements, let's look at how we can describe changes in the economy. These terms will help you explain economic movements and trends that you might notice in your daily life or read about in the news. For example, sometimes prices can change very, very quickly. When they shoot up fast, we use the word spike. For example, you might hear gas prices spiked this week, meaning they went up suddenly and significantly. Understanding price spikes is particularly important because they can affect your budget quickly. Imagine your daily commute suddenly costing much more because of a gas price spike. The opposite can happen too. When prices fall, we use the word dip. For example, if you hear stock prices dipped after the company's announcement, it means the values decreased. These dips can be temporary, like a brief sale at a store, or they might signal bigger changes in the economy. One more term in this category that you've probably heard in the news is recession. A recession is a period when the economy shrinks, and it affects many aspects of our daily life. Think about your local shopping center during a recession. You might notice some stores closing or reducing their hours because people are spending less money. Companies might pause hiring or even let workers go, and housing prices might fall. Fewer new businesses might open. Understanding recessions helps you make sense of these changes in your community and plan accordingly. Now, with all of this, the economy also goes through what we call the boom and bust cycle. I like to compare this to the seasons. During a boom, like spring, businesses grow and create new jobs. People spend new money, and there's a lot of economic activity. During a bust, like winter, things slow down. Businesses might struggle. Jobs become more difficult to find, and people tend to spend less. Just like seasons, these cycles are a normal part of economic life. Finally, let's talk about the term offset. When something offsets another thing, it means that one thing balances out another. For example, if your rent goes up, but you get a raise at work, the extra income might offset the higher housing cost. This term is especially useful when discussing how to handle economic changes in your personal finances. And now, something else that affects most of us personally: jobs and income. These terms that we're going to discuss in this category will help you talk about work-related economic topics with more confidence. First, the labor market. The labor market describes the whole world of jobs in an area. Think about it like a marketplace where instead of buying and selling products, we're talking about jobs and work opportunities. When you hear the labor market is tight, it means there are more job openings than qualified workers to fill them. This affects everything from how easy it is to find a job to what kind of salary you might be offered. The labor market includes several important pieces. For example, how many jobs are available, what skills employers need, what salaries companies are offering, and what kinds of benefits come with those positions. When we talk about wage growth, we're describing how much pay increases over time. Let me give you a clear example. If someone earned $2,000 monthly last year and now earns $2,100 monthly, that is a 5% wage growth. But here's where it gets interesting. Wage growth doesn't happen in isolation. It's connected to many factors, such as how well the economy is doing, how successful different industries are, how productive workers are, and changes in living costs. That's why you might hear discussions about whether wage growth is keeping pace with inflation. Speaking of which, let's talk about cost of living, a term you'll often hear when discussing jobs and cities, particularly if someone is relocating. Cost of living is the amount of money you need for basic expenses in a particular area. It includes everything from housing and food to transportation and daily necessities. What's fascinating about cost of living is how much it can vary. The same salary might let you live comfortably in one city, but barely cover the basics in another. This is why people often consider cost of living when thinking about job opportunities or, again, relocating to a new city. And finally, let's explore a newer term that's becoming more and more common: the gig economy. This describes a way of working that is different from traditional full-time jobs. Instead of working for just one employer, people in the gig economy often work for various clients on different projects. Think of freelance writers, rideshare drivers like Uber or Lyft, or project consultants. This type of work offers flexibility, but comes with different considerations than traditional employment. Understanding the gig economy helps you follow conversations about how work is changing in today's world. Next up, let's explore who makes all the big decisions in the economy and how these decisions affect our lives. Don't worry if these terms sound a bit complex at first. I'm going to break them down into clear, practical examples. First, the central bank. The central bank is like a manager for the country's money system. Just as a store manager makes decisions that affect everyone in the store, the central bank makes decisions that affect everyone in the economy. Their main tool is controlling interest rates. We talked about this word earlier. When you hear a sentence like the central bank raised interest rates, this isn't just news for banks, it affects all of us. Higher interest rates means borrowing money becomes more expensive, whether you're buying a house, using a credit card, or getting a car loan. It also means that you might earn more on your savings accounts. Let's talk about this a little bit more with some simple math. If you borrow $1,000 with a 5% interest rate, you'll need to pay back the original $1,000 plus $50 in interest. Similarly, if you save $1,000 in a savings account with a 2% interest rate, the bank will pay you $20 for keeping your money with them. To do all of this, the central bank uses what we call the key rate or policy rate as a foundation. When this rate changes, it usually leads to changes in all other interest rates in the economy. And this is the perfect time to transition into how governments interact with the economy through different policies and decisions. For example, tariffs, a word that is all over the news right now. When you hear about tariffs, we're talking about extra costs added to products that are made in other countries and then sold in your country. Here's how it works. Let's imagine a phone that's manufactured in country A and it's sold in country B for $300. That's the amount that you might pay. But if country B adds a 10% tariff on those phones, that adds $30 to the price, making it cost $330. And this is important to understand because while governments add these tariffs on imported products, it's usually the consumers or the customers who end up paying the extra prices. Here's why. A company will pay that tariff when they import the goods, and then they pass on the extra cost to their customers or buyers. This affects both which imported products are available in stores and how much they cost. And now let's move on to understanding national debt, which will help you follow important economic discussions. The national debt is the total amount a government owes to various lenders, including other countries, banks, and investors who buy government bonds. Think of it like a very large credit card bill, but for an entire country. When you hear the national debt increased, it means the government has borrowed more money to pay for things like public services, infrastructure, and various programs. Related to this is the federal deficit. This happens when a government spends more money in a year than it receives from taxes and other sources of income. For example, if a government receives $3 trillion but spends $4 trillion on public services and programs, there's a $1 trillion deficit. This matters because decisions about government spending and income can affect everything from public services to tax policies. In our final section, let's look at terms that help us understand economic conditions and changes. Sometimes economies face serious challenges called a financial crisis. These are periods of time when a financial system experiences significant problems. During a financial crisis, you might notice several changes. Banks might become stricter about lending money. Stock market values might fall sharply. Companies might reduce hiring or lay off workers, and it might become harder to get loans. Understanding these terms helps you recognize major economic challenges and their potential effects on your daily life. Governments might respond to these economic challenges with economic stimulus. Think of this like medicine for the economy when it's not doing well. Economic stimulus can take many forms. For example, the government might reduce taxes to help people keep more of their money. They may start large construction projects to create jobs, or provide direct support to businesses and individuals. All of these actions aim to boost economic activity and help the economy recover. And finally, let's talk about the difference between savings and investments. While they both involve money that you're setting aside, they serve different purposes. Savings is money you keep for future use or emergencies, like money in a savings account at your bank. Investments, on the other hand, are ways of using money with the goal of earning more over time, like buying stocks or property. Understanding this difference helps you make better decisions about your money based on your goals. Discussing hot topics in English, like the economy, requires both knowledge and confidence. Sometimes you might understand these concepts perfectly, but feel hesitant to join conversations about them, especially in professional situations. This is exactly why I want to tell you about the Confident Women community. The Confident Women community is a supportive space where you can practice using new vocabulary and all your English skills in real conversations with women around the world. In the community, you can discuss topics such as budgeting, personal development, and building relationships without worrying about mistakes. Inside, you'll also find live conversation sessions where you can practice discussing real world topics, including the economic vocabulary we've learned here today. You'll also find a supportive network of women just like you who want to express their thoughts clearly and confidently in English. You'll discover regular activities and discussions that help you use new vocabulary in natural conversations. All of this happens in a judgment-free environment where you can grow at your own pace. Whether you want to feel more confident discussing economic news with colleagues, expressing your opinions, or simply having casual conversations in English, the Confident Women community is here to support your journey. If you'd like to learn more, I'll share a link to the Confident Women community in the notes below. Today, we've explored essential economic vocabulary that you can use in your daily life and in professional conversations. Remember, these terms aren't just for economists. They're tools that help you understand the news that affects your life, participate in workplace discussions, and make informed decisions about your money and your career. Building confidence with these terms takes practice. So try using one new term each day in your conversations or while reading news articles. Pay attention to how these concepts connect to your daily life, whether you're shopping, planning a budget, or discussing work. If you enjoyed this lesson today, I would love to know. And you can tell me in one very simple way. Give this lesson a thumbs up here on YouTube. And while you're at it, make sure you subscribe so you never miss one of my Confident English lessons. Thank you so much for joining me, and I look forward to seeing you next time.